everybody. Welcome back to another episode of Tax Sale Insiders. I'm your host again, Brian Seidensticker. I'm CEO of Tax Sale Resources. And with me today, I've got a special guest, Jill Banner from iPlan Group. And iPlan Group is an administrator in the IRA or as an IRA space. But help me better understand, Jill. Well, one, welcome.
Thank you.
help me better understand exactly what iPlan Group does.
Sure. We are a self-directed IRA administrator. So we help people use their IRAs to purchase alternative assets. So things like tax liens, tax deeds, physical gold, real estate, entities. You can use your IRA to invest in an entity. So anything that requires, anything besides a stock bond or mutual fund, something that requires a lot of paperwork or different evidence of ownership, you'll need someone like us to do the paperwork for you.
Got it. So if I want to use my tax-free money and then in a non-standard investment, then
Yes.
an IRA is the vehicle to do that.
That's correct.
Got it. So I guess help me better understand exactly what an IRA is.
Great. So an IRA is savings for our retirement. It's for use down the road. And there are two buckets that we can utilize. One is a traditional IRA. So that means that I could take my earnings and I get a tax deduction when I put it in my IRA. And the other is and as it grows, then when I pull out the money, I'm going to be taxed. So I get a tax deduction going in. But when I pull it out, I'm going to be taxed on it. Now, there's another bucket called a Roth. Now, a Roth, you put your after-tax dollars in. So if I earn $100,000, I put money in. I've already paid taxes on it. But the good thing about the Roth is it grows tax-free. So when I turn that $10,000 into $100,000, I'm not going to pay taxes on it. So one is paying tax on the harvest, and one is paying tax on the seed, a traditional versus a Roth. And you can choose which one works for you.
Okay. So there's two different buckets you can put it in.
Yeah.
So, and I think I have some good ideas on this too, but why would I want to use an IRA for buying tax leads or tax deeds?
That's a great question. I like to tell people when they're doing an investment, they have a silent partner, and that silent partner gets paid first and gets paid probably over 20%, and that's the government.
Yeah.
So when we do things inside of a tax-free or tax-deferred environment, we are growing that snowball a little faster because we're not peeling off a little profit every time to pay taxes.
Get rid of
on
that
it.
silent partner.
Yeah, get rid of that silent partner. So with a Roth IRA, you pay tax on your income. You put it in a Roth IRA, and now all of that growth, you'll never pay taxes again. You won't have that silent partner.
Gotcha. And I think that bodes very well in the space because I'd say the majority of the liens and deeds you buy end up in, I'd say, decent gains, right? But then there's always the few that turn into huge gains, right? And if you've got that silent partner at 20% or 40%, that's the thing is if you hit one of those home runs, you go from a 20% bracket all of a sudden to a 40% bracket, keeping that in a non-taxable account would be huge, right?
Yes.
That's basically a double in your pay on that.
Yeah.
Now, is there any point income-wise where it doesn't make sense to utilize in either form of IRA? Like if your income is, like I'm just looking at some of our institutional investors out there or larger, high net wealth folks, was there any situation where it wouldn't make sense for them?
I'm not sure. I think it can always be part of your planning. And if you have any questions, you would talk to your CPA and they can help advise you, or your tax accountant or whoever you use for that type of advice. IRAs are only for individuals. So each IRA is tied to one individual. So it wouldn't really be, you can't utilize you can't utilize an IRA for an institution, but you can as an individual.
Okay. Well, can you use an IRA to own part of a company?
Yes, you absolutely can.
Okay. So you could, even at the institutional level, the investors in that institutional fund, right, could own their portion of that fund in their IRA.
Absolutely.
And many of the folks in that position probably know a lot of that, but if you didn't, it's, I guess, long story short, if you aren't using an IRA in this space, you should, right?
Yes, yeah.
Long story short.
Or at least explore it.
Okay.
Yeah.
Now, I guess, how does it work? I guess you're familiar with taxes. You've been in purchase, so you understand the weird timing involved with attending tax sales. So how do I use my IRA account to attend the auction with the tight timeline that they have?
That's a great question, and there's a couple different ways to do it. One, if it's during the week, during office hours, we're really fast in our company, so we can do funding same day. If it's maybe on a weekend when you don't have funding, there are other different tools you can use. One is something that what is called in the industry called a checkbook IRA. That's where the IRA invests in an LLC, and then the LLC purchases the property at the auction. So as the LLC, when you invest in your IRA as an LLC, the LLC has its own bank account. So then a person could write a check at an auction or send funds because they're controlling that bank account.
Okay. So they have strict rules on what you can spend it on, but it gives you that flexibility.
I'll give you another example. And this is one I did. I went to a mobile home park auction and I knew what I was going to, my max that I was going to bid. So I just had a couple certified checks in different amounts, knowing that if I was successful, I would give them the certified checks. And so if I wasn't successful, I just returned them, not for use intended.
Okay, so you can get the certified checks ahead of the auction and go. And
that takes a little more planning and a little more heads up, but it's doable. It can absolutely work.
Okay. Now I can obviously use my IRA funds to purchase the lien or deed. What about the, I guess, carrying costs or expenses after that purchase?
This is a great question. So think of your IRA as a separate entity. Think of it like a trust, and iPlan is the trustee of the trust. So we won't do anything without your permission in writing. So once you acquire the tax lien or tax deed, and then you do have other costs associated, you cannot commingle your personal funds with your IRA funds. So that means that any carrying costs need to come from the IRA. So what you would do is tell iPlan, hey, I've got this, this needs to go to the county for whatever the cost is. And you would tell us, pay Cuyahoga County this much on this date, and we would cut a check from your IRA for that expense. So any expenses associated or any redemption costs need to come out of the IRA. So that's something to think about too. If you purchase a tax lien, you're going to need some extra funds in there if there's going to be some foreseeable expenses.
Okay, so not only can you use your IRA, you really should and have to use your IRA for any carrying costs. You cannot commingle your personal funds.
Are
there any limitations on what that carrying cost or the other expense, like, is it taxes? Is it, I want to remodel the property? Is there any things that you can't necessarily use it for?
You can use it for all of that. Now, let's say that you miscalculated and you bought a tax deed, and now you want to have some rehab, but you don't have the funds. You cannot use your own funds, but you can borrow from an unrelated third party.
Okay.
So even if you were short, there are ways for you to do that.
So I can use my IRA account to purchase that property through the LLC or however you guys structure it, right? And then if I don't have enough cash, I can still go to a third-party lender and use their funds to help.
Yes.
I just can't use my personal.
Correct. The IRA can take on.
Interesting.
Yes.
Okay. So I guess how do I get started if I don't have an IRA account today? Like how do I get started? How do I get a hold of you?
That's a great question. And tax liens and tax deeds are a great place for someone who doesn't have an IRA to start, because you can invest in a tax lien for, like you said, $70 or $1,200 or, up to the millions of dollars. So it's a nice place for small investors to start. So what they would do is they would open an account, application, name, address, beneficiary. Once the account's open, then we would fund it. You can fund it with a contribution. So each year, everyone can make a contribution to their IRA as long as they have earned income. A lot of our clients, though, have we call them maybe an orphan 401k with an old employer, or some funds at another custodian, maybe being managed by a financial advisor or something. And so a lot of times they'll take these orphan 401ks and roll them over to a self-directed IRA so that they can purchase tax liens or tax deeds.
Okay.
So can you tell me a little bit about the fund that you've put together?
Well, yeah, one of the things that we learned after years in the space is the lack of financing options for investors. Yeah, it's very cash intensive. Because the reality is you can't go to a bank and get financing until you have full insurable title. And in all but 2 states, you don't have insurable title until you go through a quiet title action or something similar, which is another 6-month process. So we actually worked with a bank trying to get a financing program put together, and eventually learned it's really the regulation around banks of why they don't do tax deeds, because the tax deeds are in this weird space where they don't know if it's a real estate security or real estate. So they don't want to get caught putting it in the wrong category, so they just don't touch it with a 10-foot pole. But obviously, since they can't get it, we saw an opportunity. Right. So we put together a fund that basically provides tax deed investors with capital financing options where you can't get it anywhere else. And that's really what the fund does, is we try to enable our investors to scale.
Gotcha. And how would it work for someone who wanted to invest in, can I invest in your fund, or can your fund give me investment to help me with my tax liens?
The short answer is both.
Okay.
I'd say we do take investment in the fund, but on the larger end,
okay.
It's not for a 5 or 10 or 50. Really, the minimum right now is $150,000
okay.
into the fund. So if you want to do that, it is certainly an option. On the other end of it, if you are a tax deed investor and want to utilize the financing, then our fund can help enable you. So technically, you could get benefit from both ends.
Okay.
And so, depending on what your need is, we can have the conversation and figure out which side of the transaction bodes best for you.
Okay, so let's say I have 100,000, and I went and I got 2 tax deeds, each for 50,000.
Mm-hmm.
I'm stuck because I just burned all my capital. How can the fund help me so that I can go buy more tax deeds?
Yeah. So the way the structure works is we're a capital partner, right?
Okay.
And we call it that because the structure is unique, because you can't typically put a mortgage on a tax lien or a tax deed, right? So what happens is you purchase those tax deeds for $50,000 each, right?
Okay.
We come and we say, okay, good purchase. Here's your $100,000 back. We hold that asset for the term, right? The holding time. You now have that $100,000 to go either remodel the property, go buy another tax deed, whatever you want to do, right? There's no limitations. And then you also have the option of coming and purchasing that asset back down the road. If you now have an insurable title, can go get better financing. If you find somebody that wants to buy it from you, we can work with you on that. So there's lots of options that give providing the capital back. So it allows you to scale faster. Otherwise, typically with tax deed investors, you go buy your $100,000. If you have no more cash, you got to sit and wait, right? You got to wait for either the judicial process to finish, the title certification, quiet title, and you might be potentially earning on that money, but you sit, right? Yeah. So this is really to enable you to continue building your business, your tax deed business, with the limited capital that you have.
Gives me the capital to scale.
Exactly.
Okay. Yes. And then I suppose if I had an IRA and I purchased them with an IRA, you could still do the same thing. You would just you could fund the IRA. Yeah.
Well, I guess, Jill, you're better to answer that question. I believe so. But so how, I'm assuming that, with that structure, right, where we already established they can use their IRA mm-hmm. funds to buy the tax deed, mm-hmm. right? And we're coming in as the fund, and we're essentially buying that asset from them.
From the IRA.
Right,
yes.
and
mm-hmm.
that's okay for the IRA. Yeah. And then the IRA can still hold that option
yes.
To repurchase it from us.
Absolutely. And then the IRA would have their funds to go do it, rinse and repeat, do it again.
Okay. Yeah. So yes, I guess long story short, it would be perfect for folks using the IRA.
Absolutely. And then when you do make the gains inside of the IRA, you're going to be on a tax deferred or tax free basis. So that would be the benefit of doing it in an IRA versus doing it with cash.
Got it.
Yeah.
Yeah. Well, I guess short answer is I don't know why, if you're not using an IRA, you should be using an IRA to do this, because the potential gain in that situation is so much higher. Like you mentioned earlier, you get rid of that silent partner, which happens to be the tax man, right?
Yes, absolutely.
Well, awesome. Now, I guess on the other end of it, right, on the fund side of it, is that structure something that folks can use their IRA funds?
Absolutely. If what did you say your minimum was, 150?
Mm-hmm.
So yeah, if I had 150 in my IRA and I wanted to invest in your fund, I can absolutely put that in your fund. And then whether you pay quarterly or monthly or whatever you pay, the IRA would receive that return, those dividends. Yes. Okay.
Mm-hmm. So you can benefit indirectly in the tax sale space, understanding that I guess you are just indirectly, we're managing the assets.
Yeah.
In a lot of cases, you earn a higher return than you would trying to do it yourself.
Correct. And a lot of people do like that turnkey option. They don't want to be a tax deed expert. They want to invest in a fund that is the expert. And so they're not out there buying the deeds, but they want to be part of that. And so they could invest in your fund versus doing all the legwork of buying the deed directly.
Awesome.
In their IRA.
Well, I learned something today.
Good.
Jill, I've heard your story of buying tax liens, I think, in Washington before, but I think it was such a cool story. Do you mind kind of sharing that with the audience?
Sure. This was my first investment. I think it was in around 2000. I was a single mom and I didn't have a lot of funds. So I knew that I could invest in tax liens or tax deeds. I was looking in Arizona and because they were, I think, 18% there. I ended up buying them in Brevard County and Hardy County in Florida.
Okay.
Because one of those is where Disney is. And I thought, well, if I have to go visit my tax lien, I might be able to tax deduct the flight.
Smart.
And then I also bought in King County in Washington, and that's a tax deed state. And I purchased a property via tax deed. And when I got to the property, it was almost like a manufactured home or almost like a mobile home type lot, very small. And everybody's lot drained into mine, so it was super wet. But there were some great trees on it. I could have harvested the trees. It ended up, that's approximately when I moved to Cleveland. So I actually let my tax deed go back to auction again. And I think it was 3 years, and then the fourth year went to auction. And so I got 4 times my money because I just basically sat on it, and the person at the auction bid way more than I had bid originally. So
and you got the excess funds.
I got the excess funds by doing nothing but sitting on it for 4 years.
That's awesome.
I made 400%.
Well, that's
by accident. I wasn't brilliant or anything.
That is, I mean, it's stuff that does happen, right? Yeah. But don't necessarily plan on that happening for everybody out there. But it's such a cool story. Yeah. That's awesome. Well, Jill, thank you for your time. And how do folks get a hold of you?
We're iplangroup.com, and I'm happy to sit down with anyone and talk about their own situation and what they can possibly do. We call that a strategy session, so you can sign up online, and I'll actually do them with you, and we'll talk about your situation and where your funds might be and what you might be able to utilize your IRA for.
Awesome. Thank you.
It's my pleasure.
Good luck, everybody.